of Social Suite. The Social Suite is an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, OZ Minerals, Galan Lithium, Galileo Mining, Helix Resources, International Graphite and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.
FMG came off after that initial peak was really the challenges they faced. And that was around the volatility of the iron ore price. And that really led to a lot of pressure on the cost structure. They'd taken out a lot of debt to service the port and rail infrastructure. And without that massive focus on costs, there could have been some real challenges in survival. But they met that challenge head on, managed to get the cost to a fantastic level, and having those costs low today, they've really benefited in the ramp up in the iron ore price. So I think a key lesson to remember is that even if you miss out on the first opportunity, the overall value realisation isn't necessarily lost. I remember working on the FMG job with our audit team way back then, and we saw a lot of change in the organisation. The rollout of staff, with the Worley team was phenomenal to see, and the way that they evolved skills and adapted the company was a real lesson to observe. And I think that's something for investors to keep in mind. Look at how the company can adapt and has continued to change. So where are some opportunities today? Well, there's plenty of companies at the conference here that are exposed to future-facing metals and exploration, but a few to mention, with discovery and progression through development, we've got Chalice with the Julimar deposit, Bellevue, who are targeting first production in the second half of 2023, Stavely, who are testing a porphyry drilling target, De Grey advancing towards their final investment decision. I think one thing to mention, though, is that the gold players are at a quite interesting point in the market at the moment. The December quarterly showed that a number of existing producers are under a lot of cost pressure. So that is a key focus to look at constrained costs going forward. I guess to sort of change tack a little bit and look at some alternative approaches that have gained leverage. And that's really, I guess, with IGO. In 2002, they acquired the Victor Long complex from WMC. And I remember doing a site visit in my past life as an auditor and being shown the contrasting operations pre and post acquisition. The WMC operations, huge declines, big gear. Everything was really scaled back and nimble with IGO ownership. And over those years, they've developed a real reputation for being an experienced project operator. But exploration's always been in their DNA as well. There's a range of opportunities they've got with projects and JVs where they're always looking for that next wave of exploration success. Another key moment that's stuck with me from my career is the acquisition of Sirius. And the key takeaway, in my opinion, was that the recognition by the Sirius team that their skill set was really around exploration and development, and being willing to hand the asset on to the IGO operational team to ensure that the production value was crystallised. That transition from explorer through to producer is really difficult and really does need different skill sets. That transition enabled the Sirius team to get back to their passion via the demerger of S2 and get back to exploration. So another key takeaway is always people. Make sure you've got the right people for the right asset and that you've got people that are engaged with the project that they're working on. So where are some other opportunities today? Well, I think if you look for some of those alternative approaches, IGO is still evolving. They haven't stopped. There's been continual growth. They've got a lot of projects on the go. There's JV opportunities, so certainly worth looking at. We've got OZ Minerals, who clearly are valued at BHP with exposure to a future-facing metal, Gold Road with a significant producing asset, as well as JVs and exploration potential. As I did mention before, keep in mind the cost profile in the gold space, but M&A certainly has some real potential there. We're all aware of Newcrest and Newmont, and then Genesis St Barbara, and just this week we had Pantoro and Tulla announced. So there's plenty of scope for interest to turn to advanced explorers such as Ausgold, who have a significant reserve and resource base. The other thing that's really come to the fore and been present at a lot of the RIUs in the past is sustainability. And if you were here yesterday at the Hamilton Lot presentation, you would have heard of the ASIC focus on greenwashing. Sustainability is not just a nice to have now. Regulation's coming. That regulation will take time, but that time frame in effect is secondary. ESG has been demanded from us by all sides now. There's a struggle for talent across a range of skill sets, and the next generation of employees are actually looking for meaningful employment with organisations that make a positive impact. Customers also want to know about the carbon in their supply chains, and we're starting to see that having an impact on the provision of finance. I know from one of my mining services clients, they had a equipment finance knocked back because they had a coal contract and the bank just would not lend into that space. Their ESG committee knocked it back. even though it was a fantastic opportunity, it's an existing operation, the coal is required. They just said, no, ethically, we don't lend to those practices anymore. So I think moving forward, at the moment, we're in a stage where it's encouraged, but soon it'll be a ticket to play. You'll have to comply. Gone are the days of motherhood statements that can't be measured. Appropriate frameworks and systems are needed. So I guess to sort of touch on those where it hasn't succeeded, where does it go wrong? And I think we can all appreciate exploration is a really tough game. It is based on science, but it's inexact. There is a significant risk, which is why the return is also there. I think if you have a look at Sirius, they were down to their last drill hole of their campaign when they found the Nova deposit. They were about to exhaust all the funds. That last drill hole kept them going as a company. The margins are that fine. Funding is another area where it's a balance. Debt keeps the company equity levels and the exposure high for investors, but it can be a noose around a company's neck if you get hit by production issues or if there's a drop in commodity prices. You don't want to be a junior that has to go out and raise cash. So you want to try to raise in advance, but directors have always got that issue around not wanting to dilute existing shareholders with getting that safety net in place. So it is really a tricky issue. Market conditions are fickle. This is a long-term game. Mining projects don't turn on and off easily. So we're always going to be exposed to the market. We're very lucky to be here in WA. We've got one of the best jurisdictions in the world, but interesting geology doesn't discriminate. It's all around the globe. And of course, companies follow that. They get caught up with ownership laws, tax law changes, impact of sanctions, as we've seen in Russia, Eritrea, other countries. So there's always those risks. And unfortunately, you can't necessarily mitigate those as a company all the time. Another thing we do see, over the last decade, we've prepared more independent experts reports than any other firm. But under ASIC's disclosure rules, there's obviously limits about what you can actually say. And where we find companies can be particularly vulnerable and have a cap on value is when they're in that feasibility study stage. Pre-reserve, you can't issue a DCF necessarily. And so being able to explain where you're headed to the market can be quite difficult. So shareholder engagement is crucial, and being able to get that story across is really important, which is why conferences like today are key. So I guess a quick recap of a few success factors. You really want to see that, as an investor, do you believe that it's a strategy that the company's got that meets the market? Is the geology favourable? Have you got the scale where you're looking at a bulk commodity where you really need that volume to support the project? Quality people goes without saying. Finding nice balanced funding. And then really that engagement with the wider market, all the stakeholders, employees, community, etc. So it's a holistic sort of approach. In terms of current market conditions, we undertake a survey of all the quarterlies that get lodged, and the data's almost complete for that. What we've seen is that, up until the September quarter, we're in a pretty good position. There was plenty of exploration expenditure, so plenty of opportunities for investors. I'm expecting exploration to be slightly down on September for the December reports, but really that's got to have a bit of context. We have the wet that impacts on some operations. So I think we'll be comparable to the December prior. And I think that's going to be the same with the cash balances. Financing's okay, in my view, but December's always a slow time of year. We have got some IPOs in the pipeline, and I think keeping an eye on how those performed will really set the tone for the market. So in summary, I think we've got some pretty favourable conditions at the moment for longer term thematics. We've got some IPOs to keep an eye on. Funds are certainly being deployed into the ground, creating opportunity, and you can't forget the ESG. Just a little bit about us, and further information, we'll have our surveys out as soon as they're done, and I think we've got 3 seconds left.
Thank you. Please thank you, everyone. Setting the tone for the rest of the day. Thank you very much. That's very, very interesting. I'm still very, very dark, but I never got to that opportunity to invest back in 2005. We're going to go mining now. We're going to go exploring and mining. Andrew Radonjic, would you like to join us up here, sir? Andrew is the Managing Director of Venture Minerals Ltd. He's been the Executive Director with them since 2006, during which he co-led the discovery of the Mount Lindsay tin tungsten deposit, which is located in northwest Tasmania. He's also the founding co-director of Blackstone Minerals and the non-executive chairman of Codrus Minerals. Now, a couple of things to note about our next presentation. One, this group is assisting in the war against Putin. And this morning they announced a brand new, very large nickel target. To flesh it out, would you please make Andrew welcome?
Right, thank you, Chrissy. I'll explain those 2 points a bit later in the presentation. Good afternoon, ladies and gentlemen. It's great to be here again at Explorers Conference here in Fremantle, and thanks again to the Vertical Events team for putting on another successful conference. For those of you who don't know about Venture, I'm here mostly to talk about the flagship project, the Mount Lindesay Critical Minerals Project in Tasmania, those critical minerals being tin and, more importantly, tungsten. I'll also touch on Chalice Mining's activities on our JV ground down in the southwest of WA. Now, the Mount Lindesay project's very advanced. We've been working on that for something like 15 years now. We've spent over $40 million, got 100,000 metres of diamond core drilling in it. We've already done an open pit pre-feasibility study, and it is one of the largest tin tungsten projects in the world. It's located in a Tier 1 jurisdiction and has already reached net zero emissions. That's it, Tasmania is already net zero, and it's a good place to build a sustainable tin tungsten project. Renewable energy in the form of wind power, there's going to be a 3 gigawatt power station is proposed next to Mount Lindesay. We've already got hydro put in there back in the 80s and 90s, and they're looking at increased efficiency of that and looking at building a Marinus link, a second link across to Bass Strait. It is the battery of the nation, as said by the previous government. It's a great time to build a tin project. Tin's at well above 10-year price average, and it's 3 times the price of copper. And if you didn't know, tin is an EV metal, and the time for tin is now. Now, we've already set about working on this underground feasibility study, and part of the reason to doing this, one is to test new, simpler flow sheets. So we collected 10 tonne of sample. We're out there to reduce our footprint dramatically from the open pit, and we're going to put all our waste and tailings product back down into the mine. This mine was previously started over 100 years ago. We'll also look at using battery electric driven equipment. So ticking a lot of boxes in terms of the ESG space. We recommenced exploration nearly a couple of years ago now. We've had some early success. Obviously, we've gone and done some work for the feasibility program. We made recently a discovery of rare earth sitting next to one of our tin deposits in the clay zones around the tin zones at Reward Prospect, which I'll talk about a bit later. I'll give you a bit of an update on Chalice Mining's activities at our Southwest project. It's a great partner to have for such a high profile. We still have the O'Reilly iron ore mine on care and maintenance. Obviously, the price is looking stronger. Shipping prices are down, so certainly the metrics there are looking more promising. So it's a free option, the iron ore price. I won't touch much on the Golden Grove North or Coolum projects today. There's our tin, the price there of tin, which has reached highs of $50,000 last March, went down to $17,000 in October, and a couple of weeks ago it was around $32,000, $33,000. So it's a very volatile price, very much dependent on China. China is the main user and producer of tin, with Indonesia second. Our share price fluctuates with news on work by Chalice on our ground and very much on the iron ore price. But certainly I don't think it's the tin tungsten project is factored in. But certainly I'll explain a bit more about that project, and maybe you can have a look at revaluing a company based upon that. The board's been there since 2006. So when we restarted this journey back on our Tasmanian assets on tin, tungsten, and also iron ore at the O'Reilly mine, we were able to use that skill set available there. So we've got moving quite quickly with those assets. Those are all our assets. Like I said, I'm going to focus very much on Mount Lindesay and the Southwest project today. Now, for those of you who don't know about the mining industry in Tasmania, it's been there going for 140 years. When I first started the mining industry back in the mid-80s, the best air leg miners and jumbo operators came from Tasmania. They worked at Rosebery, they worked at Mount Lyell, they worked at Renison Bell. They're great mines, they're all world-class mines, huge range of commodities. And there's King Island just sitting off the coast here. That's a world-class tungsten mine, which is just restarting now. So, and also you've got the Avery nickel mine down here. So a great range of commodities in the area. So one of the most prospective areas in terms of mineral prospectivity in Australia, by no doubt, and certainly a lot of infrastructure there, like power, road, rail, etc. So you're very blessed to be there. And amongst that history is the Mount Lindsay project. This is a shot back in 1914. As you can see, there's not many trees standing. There's nothing pristine about it. It's been mined. There's over 600 mines registered in the Tarkine district, which groups talk about all the time as being pristine. This is another picture of mining on Mount Lindsay, alluvial mining, extensive alluvial and underground mining back in 1911. So there's a fairly, that's all throughout the west coast of Tasmania, despite the very tough conditions they went out there and mined. The little bit about tin now, for those you don't know. Now, tin is really all about solder. Every bit of new solder comes out is 96% tin. So in your mobile phone, you will have about 0.7 of a gram of tin. Without that tin, it doesn't work. It's as simple as that. It's about 4 cents worth of tin. So the tin price all of a sudden reached $100,000 per tonne. It'd be adding an extra 12 cents to the cost of your phone. Inconsequential. It's called a spice metal for various reasons. It's very important that things work. Everything's electronic, needs a circuit board, you need solder, the glue that joins that together. So tin is very, very important. So you can see that the applications there, tin foil in solar cells, anodes, electric batteries. It improves efficiencies. It's in wind power, energy storage and recycling. So we're pretty much stuffed without it. So also all your charging stations, there's up to 1 kilogram of tin in each charging station. So it's, as you can see there, it's in the 5G networks as that gets developed. Tin's often used to improve the capacity of lithium-ion batteries, etc. So a very important commodity, which a lot of people don't really understand too much. In terms of statement by Wood Mackenzie a couple of years ago, most of the ESG comes from very, dare I say, dodgy jurisdictions: China, Russia, Indonesia, Egypt, Bolivia, Peru, etc. These as no to do ESG compliant on these sort of projects and in DRC, virtually impossible. Most of those are struggling to achieve that. But Venture has an asset in Australia. It's unique. Renison Bell's the only tin mine in Australia, and we're looking to be the second tin mine in Australia. A bit about tungsten now. This is where unfortunately tungsten has a very, one of its main uses is in armor plating and armor piercing rounds. Now, just as a fact, in the Ukraine, up to 90,000 rounds are used in the peak of the war in the early days. 3.6 kilograms of tin per round. That's 324 tons per day at its peak, which is equal to 1 year's production of tungsten being consumed. So as the war goes on and NATO and the US and the Koreans supply these weapons, the tungsten will be getting used up at a pretty rapid rate, which leaves nothing around left for all those other uses like steel hardening, tungsten carbide drill bits, etc. The tungsten is as heavy as same density as gold, and it's high melting point. It is very critical mineral going forward. It's been called strategic before. The Americans used to stockpile it when there was a Cold War previously, and guess what? Now we've got another Cold War. So stay tuned for that. I think there's great opportunities for tungsten going forward. A bit more about the project. 80,000 tonnes of tin metal. Like I said, one of the largest tin tungsten projects in the world. We've got a third of the King Island deposit sitting in our tin, with our tin mineralisation, and we've also got magnetite sitting. So you look at those grades there, the McDonald Chute, Radford Chute, they're sort of grades you see at Renison and King Island. So we're very fortunate to have that mix in our project. So that's why we're back in there looking. That's the resources we did back in 2012. It's a large deposit, and pretty much when you look at those numbers, you realise that we were keen to open pit it originally, but now we're looking to bulk mine it from underground. So, like I said, 100,000 metres diamond drilling. A lot of it's in the measured indicated category. In fact, at the higher grades, it's around 83%, up to 20 by 15 metre space diamond core drilling. The price is currently $27,000, which is well above the 10-year average of $20,000. It's still 3 times the price of copper, and it's 100% higher, or double the price it was in 2016. Tungsten, likewise, almost double the price. But these prices are controlled by Chinese. It's in the small markets, and they're manipulated. And as a consequence, that's why they're recognised as critical minerals, and the government's very keen to support the development of this, to provide this product to Europe and to the US. Now, a bit about the geology. We announced this morning our nickel target, which is located just about here, which we'll just reference in a second. That's Renison Bell. The same granite source that feeds Mount Lindsay is at Renison as well. And we're drilling this target zone sitting there at the moment after we did all our metallurgical work. Most of our tin resources sits here on top of Mount Lindsay. We did some exploration a couple of years ago, had some early success with some skarn found on this Renison mine sequence. And also we drilled a long strike to Mount Lindsay, and we found mineralisation that looks very similar to Mount Lindsay itself, so there could be another repeat. We haven't gone back and followed up that hole. But this is the rare earth mineralisation we found around a reward prospect. When you look at those grades, they are typical sort of ionic clay type grades, and they're sitting basically in the waste rock or in the hanging wall of our tin mineralisation. Also on the surface, we've found some very special sort of rare earth grades, which you can see there. Those are the magnet rare earth values, point up to nearly 0.5%, neodymium, praseodymium, etc. That's at the surface of some of the gravel. So we're drilling some more holes to sort of evaluate that opportunity, and we're testing a new target running parallel to that sequence at Cruncher. And I think I'm just about out of time. I'm pretty close, but this is the nickel target here. It's up to 3 kilometre long EM target. It's a strong EM conductor. We can't explain it. We've got elevated nickels at surface. The rig will probably move on to that this weekend, so we'll get some pretty much immediate visual results on that. So we're looking for, very probably big intersection at around about that sort of sub 1% type nickel grade. So we are in the same belt as Avery. We're 25 kilometres away, and there are some very good indications of some special high-grade nickel sulfides nearby. So early days, but we're pretty excited by that. Just briefly in the last couple of minutes here, talk about Chalice, the joint venture. This is a unique story. We had a project. We couldn't work out the geology of it in 2018 when we first drilled it, but with discovery of Julimar, we got a knock on the door. 3 months later, we did a deal, and in July of 2020. So, Julimar was discovered in March that year. And so it's great to have a partner with all that knowledge of their discovery of Julimar. Obviously, we're well positioned in terms of the concept of this Western Yilgarn province, nickel copper PGE province, and they're out there on the ground being active. But this is the reason why they came, because when you look at the mag signature, it looks very, very similar. They called it a Julimar lookalike in their July announcement of 2020. We had airborne EM. We'd intersected massive sulfide with chalcopyrite, coarse chalcopyrite or copper sulfide, nickel, elevated nickel, cobalt values, and since their JV was done, Chalice have been on the ground. They've spent their first part to get to 51%. They made a decision in August last year to go to 70%. So they're following up some of the early, I suppose, auger geochem success, and that's really points to this particular slide. It is sitting above an EM anomaly, and there's a non-magnetic ultramafic zone sitting out there that's been mapped in previous mapping done by the Geological Survey. So looking forward to seeing those results in the very near future and potentially some drilling later this year. And I'll leave it at that, but the iron ore project remains on, like I said previously, on care and maintenance, and we're looking, it's available to start up should the iron ore price and the shipping price behave itself in the near future. Thank you.
Thanks very much, Andrew. Now, there are many different paths to becoming a geo. You've probably heard a few stories, probably some old geos in the room yourself with some stories of how you got there. Our next presenter's fascination with what lies beneath his feet started when he was about 6. He found a fossil that had been discarded in his backyard. It was a cephalopod. It sent him down a little path that's led him here to us today in his role as the exploration manager at Austral Resources Australia. And Austral is really, really busy at the moment. They're busy mining. They're busy producing one of the critical minerals that has become front and centre for us here at the conference in 2023, copper. 99.99% pure LME grade A Kappa cathode. And they're primed for expansion over some very prospective ground. Let's hear more. Make him welcome, please.
Thank you, Christina, and thank you, Vertical Events, for putting this RIU Perth conference on and for the invitation to present. And as discussed, my name is Ben Coutts. I'm the Exploration Manager at Austral Resources. I'm here today to give you a quick update on the status of Austral, but also more specifically to talk in detail about exploration plans. And can't go past this slide without calling out our exploration technician, Greg Walker, front and centre there. And also acknowledging the traditional custodians of the land we work on, the Injalanji and Kalkanoon peoples and their leaders past, present and emerging. So standard disclaimer and competent person statement. So who are Austral? Whoops, can we back up one there? Who are Austral? Austral are a little different in the context of this conference because we are based in Queensland. We are centred on the Mount Isa Inlier. You would have first heard from Austral probably at this conference this time last year when Dan Johnsey, our CEO, presented. So over the last 12 months, what has Austral done? What have we achieved? We have established the Anthill open pit mine, which is located here, 45 kilometres to the south of our Mount Kelly SXEW plant. And over December and January, the last 2 months, we've been producing at a rate of over 1,000 tonnes of copper cathode a month. That cathode enables self-funded exploration over our 2,100 kilometres of tenure in the northwest Queensland mineral inlier, which, as many of us will be aware, is absolute tiger country for tier 1 deposits such as Mount Isa Copper, Cannington, Ernest Henry, and a number of other smaller but equally economically attractive targets such as Lady Loretta and Dougal River. Austral has an exploration strategy. It's similar to the one that Dan would have outlined earlier. The 4 elements of the strategy are detailed there, and I'll be, in the course of the presentation, speaking in more detail to each of those elements. And the exploration strategy is important because, as you'll find out during the course of this presentation, Austral have quite a complex tenure and quite a complex package of mineral prospects, mineral assets to develop. The other key thing that we've achieved over the last 12 months is we've formed and firmed our exploration team, and we're starting to build familiarity and hopefully some comprehension and insight with geology. So if we look at a classification of the over 140 mineral prospects or mineral assets that are on Austral tenure, and this is classified using the MinVal 2015 criteria. It's a fairly standard sort of a representation of a exploration and development pipeline with Anthill, our current producing mine, at the top of the pyramid, and early stage exploration projects listed at the bottom. All of the projects that are in bold, we have drilling plans for 2023 and funds budgeted. We have a very clear focus on closing this gap, this development gap, and a very clear focus on exploring on mining leases. And I'll get into that in a bit more detail, looking to move from pre-development into development. One of the first resources we will be moving from pre-development to development is the Lady Colleen resource. Several of you will be aware we had a positive announcement from a scoping study on Lady Colleen this morning, which is going to drive significant further work into 2023. Another way of looking at the sort of how do we sort out the smoke from the fire? The image on the right-hand side is Austral's western tenement area for clarity. There are over 120 identified mineral assets or exploration targets there. On the right-hand side are the critical few that we're going to focus on in 23. So how do we make that distinction? One of the key distinctions we make is the recognition of, on Austral's tenure, where we have economic copper oxide, we also have underlying economic copper sulfide and direct spatial association. So we are exploring for sulfide to find oxide. As a biographical side note as well, I will, throughout the course of the presentation, talk about exploration. I'll also talk about resource development. The last 15 years of my career, I've been doing resource development with BHP South 32 and Evolution. And for me, exploration is a key part, but it's a part of resource development. So to look at our strategy. Phase 1, Antil. Antil is our current producing mine. When we listed in 2021, Antil had 4 years of mine life. So you take away 12 months of production, and that gives us a burning platform. So exploration around Antil. In 2022, we looked to utilise all available data from early mapping back from the 70s and 80s, pre-development mapping through to some of the most recent geophysical and geochemical techniques. Our results in 2022 at Antil define a clear geochemical corridor with copper and arsenic anomalism. The hotter colours are the higher grades, and I'll keep drawing your attention back to hotter colours being higher grades, and coincidental with fertile structures. And within that corridor of anomalism, we recognise there are zones in there that still have yet to be effectively tested. I'll draw your attention to some of these target boxes up the top here that are based on the Antil resource and Antil resource metrics. So we have a number of exploration targets at Antil that will be following up in 2023. And that also includes this area to the east of the ML, which has not yet been effectively explored. But one of the unique things about Austral is we have significant tenure on mining leases. So we have over 53 square kilometres on 15 mining leases. Exploration and discovery on a mining lease provides a very rapid development pathway and also quite compelling risk-return metrics. Again, we look to utilise all available data, and we actually found a lot of value in the pre-development mapping from companies such as Placer Pacific and Union Minyar in the 70s and 80s, where they were very focused on understanding the structure and the stratigraphy of the deposits pre-development. And we're hoping as we dig into this database, as we dig into this geologic data, part of the intent is within our exploration team, we build familiarity. Out of that familiarity, we should get comprehension. Out of that comprehension, hopefully insight will come and then discovery. But hopefully I'll be back next year to tell you more about that. So we have some really clear oxide exploration targets on mining leases. The images to the right. This is, my apologies, this is our Lady Annie ML. Lady Annie was in production previously as a copper oxide deposit. What we've identified, the top image is some geophysical targets at Lady Annie that we'll be testing in 2023. Also, as we review the historical drilling and the historical databases, we are identifying areas where it's apparent that the geologists at the time did some quite significant drilling on oxide resources that then weren't folded into the oxide mineral resource ore body at the time. So this will be a target that we'll be looking to follow up in 2023 as well. And 30% of our exploration budget in 2023 will be on oxide exploration on mining leases. Regional oxide and regional exploration will comprise 50% of our exploration budget. We have 10 prospects that we will be evaluating. The image on the right-hand side, I quite enjoy. It's your classic economic geology. 3-phase, there's your metal source, the Eastern Creek Volcanics, widely recognised as being the source of copper in the Mount Isa inlier. All the lines in through here, the structures, the faulting, the multi-phase, multi-deformational history of Mount Isa, and we are particularly interested in what we call the D2, and especially the D2 conjugate sets through there. And then the stratigraphy, which is the polycoloured image there. And again, we're particularly interested in carbonaceous units, carbonaceous shales, and they then form these hot colours, which are the prospects that we'll be looking to explore in 2023, with over 50% of our exploration budget targeting regional targets using wide-spaced bump testing to really look to understand the anomalies. But wait, there's more. It's not just oxide, it's also sulfide. And so for Austral, in 2022, Lady Colleen was a standout resource development success. We updated the mineral resource estimate after some drilling. We then undertook a scoping study. The results were released today. They are positive. They will drive future work, including exploration. You'll notice again the high colours, the hot colours in the image on the right-hand side are the high grade. And that high-grade zone is open along strike and down plunge, and we will be following that up along with further waste rock classification drilling. We'll be applying a similar approach to other oxide opportunities on mining leases. And the image on the upper right-hand side is the Lady Annie open pit looking north. A comparable image below, you can see where the oxide's been mined out. You can quite clearly see the down plunge continuation of the ore body there. That's a continuation of the sulfide ore body, and again, the hotter colours representing higher grades. So, we have some quite exciting sulfide targets on our MLs as well. And back to Tiger Country, back to the first comment, our regional sulfide exploration potential is exciting. It is undervalued, it is underexplored. We have sulfide exploration targets on 2 tenements, our eastern tenements, where we have the Enterprise deposit, which is the image on the upper right. We declared a maiden resource there in 22, and we will be doing further exploration there this year. Likewise, we'll be working into our western tenements. We are very interested in the Investigator deposit, which has strong structural and stratigraphic similarities to the proximal Mammoth Esperanza deposits of 29 metals. We're also very mindful of some of the regional exploration work that is current, that is suggesting continuation of major mineralising structures at Mount Isa through into Austral tenure, and we're looking to further explore there in 23. So exploration is not only about drilling, it's not only about resource development, it's also about the deals, the JVs. And so Austral are active in the JV space. The image on the upper right is Russ, one of our geologists, doing a field inspection of a copper oxide opportunity to the west of Mount Isa. And the image to the back in the lower right is of the exploration potential and exploration plans over the JV that we have with Glencore. That is 8.3 million over 5 years. That is outside our 2023 exploration budget of $7 million. We do plan to start drilling for oxide. Thank you. And likewise, Glencore will be planning to start drilling for sulfide in 2023. So, to wrap it up, Austral, we are an Australian-based pure copper producer and explorer. We do have a very clearly defined 2023 exploration program with targets, both oxide and sulfide targets, both on mining leases and regionally. We are acting with integrity into this space. We're delivering on our production commitments we made last year. We're delivering on our exploration targets we made last year. We would love to meet you. Please come and talk with myself and B at booth 91. Thank you very much.
Thank you very much. Right, it is 35 minutes past 2, 25 to 3. We've got a little bit to get through this afternoon. A reminder for those of you who weren't in the room when I mentioned before, we've got drinks this afternoon out in the atrium area, courtesy of the team at Gallagher. And if you'd like to be in the running to win that $500 crown voucher, you need to just go out to them in the afternoon tea break and play their resources game that they've got out there and stick your card on the wall. I think they've got about 20 places left. So we'll see how you go. Right, now, if you can cast your mind back to the start of this session, Adam got up and during his speech, one of the juniors to giants that he mentioned to us and gave as an example was IGO. And they're actually next to present here at RIU. So what is a junior to giant doing presenting here? What are they back here on this stage where after their meteoric rise? Well, they're actually looking for opportunities to invest as well. People, companies with exciting projects, they underline very heavily the word exciting projects. And they've also got another caveat that they're really, really firm on. That is that they need to be exploring clean energy methods. So it has to be a company exploring clean energy methods. So to explain, I would like you please to welcome IGO's Exploration Project Manager, Ms. Rebecca Church.
Hello, I'm happy to be here today to provide you with an overview of exploration at IGO. The usual cautionary statement and disclaimer and competent person statement. So first, I would like to give a brief overview of who IGO are as a company. The company has embarked on a transformative journey in the past 5 years, making a deliberate and early shift in 2017 from a gold, zinc, copper company to one 100% focused on clean energy metals, principally nickel, copper, and lithium. As a result of this strategy, we sold our interest in Tropicana Gold Mine in 2021, and in that same year acquired an interest in a JV with Tianqi Lithium. And then in 2022, we acquired Western Areas. During this growth, IGO have demonstrated a consistent record of shareholder value, with our current market capitalization at over 11 billion. And 2022 has been a very successful year for IGO. Our profit after tax was 331 million, and our net cash position was 367 million. We have a confident shareholder base who see growth in their investments and a track record of delivery in mining, acquisition, and exploration. And our plan is more of that same growth. We intend to maintain this growth through being a purpose-led organization, a purpose centered on making a real difference through our strategy to be a globally relevant supplier of products we will all need for clean energy in our futures. IGO is proudly Western Australian, with all our producing assets here. Though we have a strong home base that we wish to maintain, we recognize the required growth in the EV space, and thus we believe it essential that we begin venturing offshore to explore. So a key message for today is that IGO and I may be interested in becoming involved in your project, wherever it is in the world, so long as it aligns with our strategy and our values. Here is a quick snapshot showing our steady pipeline of growth as we continue to develop our portfolio of high-quality assets, exposed to nickel, copper, cobalt, and lithium, both upstream and downstream, and maintaining our focus on brownfield projects, exploration, and disciplined M&A. And now some more detail on our exploration division. At IGO, exploration is part of who we are as a company. We explore over 100,000 square kilometers of ground across what we believe are some of Australia's most prospective belts. And as I've mentioned, are now establishing our presence internationally, particularly in regions we consider to be of lower ESG risk. We consistently commit $65 to $75 million per annum on exploration, as it's our lever for continued and organic growth as we fulfill the EV supply and demand equations. Though we retain an open mind, our focus is on high-value deposit types and those that complement our existing processing facility. Thus, nickel sulfide, sediment-hosted copper, and hard rock lithium. And we don't mess around. When we enter one of these belts, we ensure we apply the best science, the best people, and the required time and budgets to explore these regions properly. Across our projects, we have 30 JV partners, and I'd like to shout out to them now, as it's not possible to hold this much ground without those great relationships. This image speaks to our healthy and growing pipeline of exciting exploration projects. Our nickel pipeline is the most spread, a direct result of IGO's focus and hard work in the nickel space for many years now. In the last couple of years, we have been developing in the copper space, and our pipeline there is starting to grow, and projects span from early assessment to those with existing resources. Our move into the lithium space is the most recent, really only within the last year, but already we are assessing highly prospective ground around Greenbushes, and then of course there was the offer placed by IGO and Tianqi Lithium to acquire essential metals. I think it's important to point out that we believe in holding on to only the best ground, this being where our technical and ESG indicators point to the highest chance of discovery and to deposits that align with our company's strategy and scale. Given this, projects will both enter and exit this pipeline, particularly after early assessment. An example of a project we recently exited is our Frontier project in Greenland, which did not meet our criteria. With exploration moving increasingly undercover and a requirement to seek often blind or elusive deposits, we believe the only way to effectively and efficiently explore across thousands of kilometers of tenure without wasting shareholder money is through having that scientific edge and rigor. We support the highest quality data collection and processing and have the teams and expertise to ensure it's interpreted and utilized in the smartest way. We don't just run EM. We have in-house specialists who can optimize our results through integrated technology development. We don't just soil sample. We develop highly effective sampling techniques and partner with analytical laboratories to extract data that just wasn't feasible a few years ago. And I can go on. We are also doing what very few exploration teams are doing in this high volume and spread of data. We road test our theories in 3 and 4D to reduce arm waving and ensure our budget is immediately focused on those within the most prospective areas. And all of this, of course, made possible by a team with a wide range of world-class expertise, and more importantly, perhaps, a mindset towards innovation, curiosity, and boldness. I'm now going to quickly run through the quick snapshots of our current portfolio, first up being nickel. In the Albany-Fraser range, we are committed to seeking additional ore sources proximal to Nova, and this is directed through both greenfield and brownfield exploration programs. Known sulfide occurrences are spread across this belt, demonstrating that mineralization is not confined to a local geographical setting. The spread indicates that the right plumbing exists to provide conduits for these nickel copper bearing magmas, and thus there's a high probability of more Nova-style deposits undercover in this region. The team is constantly adding to and reinterpreting its pipeline based on learnings from Nova, Sylvanite, and exploration data. The same team also assesses opportunities to extend Nova's mine life, particularly via Sylvanite's development and exploration. Sylvanite is the nickel-copper mineralized intrusion, representing a potential open-pit secondary feed resource sitting about 35 kilometers from Nova. And additional near-mine targets continue to be tested. For example, the Chimera target 9 kilometers from Nova, which is akin to, where the magmatic textures and mineralization styles here are akin to those seen in the Nova intrusive complex before Nova's discovery. So, a strong pipeline of early stage to development stage targets for the Fraser Range team ahead. Here we have the Kimberley project, which spans across 2 highly prospective belt scale areas referred to as East and West Kimberley, and both belts have proven magmatic sulfide mineralization. We consider these regions underexplored for nickel, both spatially and via the utilization of modern techniques. The Kimberley team have therefore been focused on acquiring regional scale data sets to aid in reducing the search space and generate targets. A key data set has been our extensive airborne EM, which then focuses our ground EM crews over the most prospective areas. Different areas are at different stages. Some portions require early stage assessment, where things like outcrop mapping are simple tools we can use. Other areas have already advanced target testing. For example, at the Sentinel project in West Kimberley, a project in JV with Buxton Resources, this represents the largest contained area of outcrop and ruins dolerite in our West Kimberley portfolio, and early drilling has already intersected minor sulfides at the Skarloey target area. Just want to introduce you to a couple of near mine exploration efforts. One is at Forestania, which includes 2 operating high tenor nickel sulfide mines, Flying Fox, which remains one of the world's highest grade nickel mines, and Spotted Quoll. A consolidated land package here forms part of this project, which we consider to be highly prospective, both for resource upside potential near the mines and for regional nickel and lithium targets elsewhere. Our Cosmos project is located 30 kilometers north of Leinster in one of Australia's premier nickel belts. And exploration here is focused on brownfield programs to complement the development of the Odysseus underground mine, where we consider there to be a significant exploration upside, both at depth and along strike. Having introduced you to our nickel projects that are in testing or development stage, it's also worth mentioning that our belt scale land holdings that are under early assessment. The Western Gawler project, Raptor project, and Iridina project each represent extensive belt scale holdings considered highly prospective for nickel copper sulfides. Raptor and Iridina are both first mover opportunities that are under early assessment using geophysical airborne data collection. In the Western Gawler, the potential for magmatic hosted nickel copper sulfide mineralization was recognized some time ago, but the presence of intrusive hosted sulfides was confirmed in 2020 with Western Areas discovery at Sahara. Now on to copper. The Patterson project is focused on exploring for both sediment-hosted and intrusion-related copper-dominant deposits under relatively shallow cover. Historic exploration in the region was typically shallow, failing to penetrate cover and use primitive methods. The Patterson team have thus prioritized the acquisition of high-quality belt-scale datasets to map the region. This has included magnetics, gravity, EM, MT, IP, systematic soil sampling, and targeted air core programs where cover deepens. All of this has been integrated to generate 4D geological and structural models at both a belt and camp scale. We believe 4D modeling is the only scientifically robust approach to deciphering the Patterson Basin architecture and unlocking undercover targets while honoring the mineral systems approach. Our models allow for evidence-based conceptual target generation where direct detection isn't available, thus avoiding some of the copper smoke we get in the region, and so we can focus on finding a deposit of high value and scale. The Patterson team have been moving to target testing phase, and early drilling has confirmed model accuracy in terms of both basin architecture and also its honing in on where copper-bearing fluids has occurred. The Copper Coast project is an early-stage conceptual belt-scale landholding considered highly prospective for sediment-hosted copper deposits, akin to those found in the Central African Copper Belt. The team remain in the mapping and 4D modeling stage of this project, with pastoral landholdings providing a blanket of cover. Mapping has required the merging of both proven and innovative techniques. Magnetics, gravity, MT, and seismic have been collected, and these data sets and an expert understanding of sedimentological and structural geology are once again integrated into our 4D models, aiding in us reducing our search space and ranking a growing list of areas of interest for closer assessment or testing. And also within our portfolio, we have 2 copper projects managed by our JV partners, Copper Wolf projects with Buxton Resources and Lake Mackay project with Prodigy Gold and Castile Resources. And if you'd like to hear more about these, we can talk to you about these at the booth. Last but not least, an introduction to our emerging lithium portfolio. Our Greenbushes regional project covers ground proximal to Greenbushes mine, the world's largest operating hard rock lithium mine. Our team is scheduling early assessment ground activities to investigate for prospective stratigraphy. And this radiometric image here from our JV partners Venus Metals shows signatures associated with potassium-rich pegmatites across our tenure. So I'd like to leave you today with a summary of our top priorities for this year and an invitation to please come and speak to us further at the IGO booth outside if you would like to hear more about some of our projects or tell us more about your projects. Thank you.
Thank you very much, Rebecca. JP De La Varga, can you come up here, please, and join us, sir? Now, if you've had a chance to chat with JP at the Galan booth over the last day, you'll understand why he's one of those people in the mining industry who just gets along with just about everyone. And he spent a lot of time in this industry, so he does know 1 or 2 of you really well. Now, the last 20 years in the industry, he's cemented his role as a Chilean-Australian mineral industry professional. And he's earned a reputation as well as a lithium market specialist. He's led and he's listed private companies, majors, and now he is the managing director of Galan Lithium. There's a lot of talk about Galan since last RIU. Were you actually in the room at the last RIU or were you stuck overseas?
I was stuck.
I
was in Argentina, yeah.
You're in the so then you're actually here now, virtual now. So you've increased a lot of your numbers all over the place. I went searching and everything seems to be up. So explain to us why and why we should invest. Would you please make him welcome, everyone? JP.
Good afternoon, and thanks for the beautiful introduction. I'm pleased to be here. This is my 4th time presenting, and this has been a fantastic journey from saying that we could have lithium to take an elephant out of the rabbit had. It wasn't just a rabbit, it was an elephant. So Hombre Muerto keeps on giving. And Hombre Muerto, someone said once upon a time, Hombre Muerto is special. And I do believe that. And I will be very simple on our strategy in where we at, where we're going. And I know you're all here trying to look for an investment. We're all here to make money and do a very good profitable investment into lithium. I add one more thing. I care about the industry. I care about the people in Argentina. I care about the people that we work with. And I want to make this the best possible place to work within the industry in Argentina and hopefully in Australia. And why do we have something so important in Argentina? If I could describe Hombre Muerto, and sorry to the vegetarians in the audience, but given that this is Argentina, Hombre Muerto will be the fillet of the salt flat of Hombre Muerto, the best cut you can get. So why is that? Because it's a gift from nature, high grade, low impurities. What does that convey? It conveys low operating costs. What else that it conveys? It conveys an opportunity for us to start with our stage 1, 4,000 tons, very light on capex, and start this project in construction in the second half of this year. So with that introduction, I will give you the message of Galan Lithium. So we got a fantastic resource, high grade, low impurities. This is Hombre Muerto West. It doesn't look like much, but the geometry is deep, it's porous. It's got 5.8 million tons of lithium carbonate equivalent. Importantly, it's got 4.4 million tons of lithium carbonate equivalent in measured. So we have the best project in Argentina with one of the highest measured resources today. And that number is going to change. Why? Because we kept on drilling. We're going to come out with a DFS coming up at the end of Q1, and that number that should keep going up. What does it mean? It means that we have a very robust project that hopefully is going to give us little hiccups once we go forward with production. What have we done? We've done our pilot plant. This is going to be producing lithium concentrate. Within April, March of April, we're going to be able to produce around 70 liters of lithium concentrate that we can give samples to the rest of the market within Argentina. But this is a baseline for our 4,000 ton development. We also done pumping tests. We are ticking all the boxes in terms of holding grade, having the enough volume to sustain our 4,000 tons. In other words, all what we need to do is get the permits, start constructing the second half of the year and be in operation in 25, meaning getting to cash flow in 2025. If I use the numbers today for selling a rough calculation of lithium chloride concentrate, at today's prices, we could get an EBITDA anywhere between $150 to $200 million. We are going through a study, but I'm giving you a little flavor of what this could be with a light capex, getting quick, getting early, and the lithium price are still hot. So that's our mission. But importantly, we have the wells to sustain that level of production of 4,000 tons today. We don't have to do anything else. So our strategy is very simple. Produce lithium chloride concentrate, sell that within Argentina, get into cash flow 2025 first half, and then that will give us the next leg up in terms of what we're going to come up with the DFS study to produce 20,000 tons plus. So watch this space at the end of this quarter. So a bit about the company. This is a bit of a yo-yo. We all seen that, but this is a very good opportunity to get into Galan because where we are sitting today. We've got all the cash we need to do the study, to start early construction if we need to. And we also have another project called Candelas that we're going to start tapping in the second half of the year. So this is a tick box about what we've done, where we've done it, how we've done it, and this is the time frame. So by the first half of this year, we're going to get the permits to construct 4,000 tons. Second half, we're going to build. Then the operation takes around 9 months construction. Evaporation takes about a similar time, 9 to 12 months. So first half of 25, this is the number that get in your head, we're going to come online. And thereafter, we want to wrap up with the 20,000 plus that the DFS is going to come up at the end of the quarter. So this is a an inflection point in our investment. It's an inflection point for the company. We're going to be producing in 2 years. And we are, if you are remembering Galaxy and Oro Cobre, we are on the same trajectory. So I mentioned high grade, low impurities. There's no one better than us. The economics are going to be super compelling. We do ESG and we do care about people. I'm from that part of the world. I know how it works, and I just want to make a difference and make a difference for the better in the region. So we have a project delivery. We're bringing people into the team. I joke around. We have people from SQM or ex-SQM into Galan. We're gonna get more people into the team of Galan, all ex-SQM, and I joke around that the ticker of Galan should be changed from GLN to XQM. I know that it's Sanadu Mining, but I'm just throwing that around. And that's part of our team. You know, we're getting people that have done it, have experience. They come from an operating background, done there before, and this gives us a solid, robust team and a very good point of differentiation with everyone else that's trying to do the same. And we have another project, Candelas, and something more close to WA. So that's a map where we at. This is a bit of a close-up as where who are we sharing this area with? POSCO, Livent, Allchem. We're sharing the same infrastructure. We're not reinventing the wheel, keeping simple. Strategy, once again, produce lithium chloride concentrate. We're going to sell this within Argentina. Why we are the best? And this tells a bit of the story. The round circle there to your right shows the further to your right you are, the highest grade you are, the lower that you are to the baseline, the lowest of magnesium. We have a combination of both. And this is a gift from nature. So I cannot reiterate how many times, but this is something real. This is something going to come online. We're going to start with a stage 1 development, which is short, light on CapEx. We're not going to come out with a number that's going to kill us. We want to execute, reduce the risk of execution, reduce the CapEx risk of blowing up. Light CapEx will allow us to walk before we run. So we want to be able to tell the market what we can do and prove it up. And the cash flow from the first stage is going to be able to fund part of the second part of our development and also Candelas and finance other things within Argentina that may be on the pipeline. So this is a PEA, just to give you another flavor of the economics. This was done a little while ago, but a compelling numbers. Our strategy is to sell lithium chloride concentrate that is one step before carbonate, but we're going to be taking most of the margin that lithium carbonate has. In other words, we are going to be doing the same thing that every single other concentrator is doing in Australia. Some people call it liquid spodumene. We're going to be selling lithium chloride concentrate within Argentina. We're selling concentrate. Same principle. Concentrate gets most of the value, and we want to be part of this. We come quicker online. We don't have to qualify our concentrate. We don't have to put another $200 or $250 million to get a carbonate plant. We don't have to have another team. We don't have to have more CapEx, operating CapEx to keep going. In other words, we come to market quicker. Instead of being 27 the year if you do carbonate, we can be on 2025. We give certainty of what we're doing and less risk of execution. So these are the things that we've done. We proving our concept. This is our concept pilot pond, and it's advancing, it's ticking boxes. Chemically, it's doing what we said we'll do. We have another project. We got Candelas, and then if you see the map, just to a refresher, Candelas is on the other side of Hombre Muerto, next door to Allchem. So same basin, same chemistry, same principle. And why do I get so excited about this? It's the cost curve. This is an old cost curve. It's not even the 2025, but this gives you, once again, the visual spectrum where Hombre Muerto West is going to sit on the far right. The one next to that's Candelas. What we have in between is our exploration target that's called Greenbushes, and I will explain more of that in a minute. Our ESG, we're doing the best we can to reduce our impact with a low carbon footprint, but it's not necessarily all about the environment, it's also about people. People in the area have low jobs, we want to train them, we want to make a difference. And personally, I've been fronting these things. talking to communities. We are making sure that the hospital got enough funds to operate, and we're helping the schools as well. So we're making sure that whatever we have, whatever, even the budget is not that great yet, but we can make a difference to the people that are living there. And we're employing local people, we're training them. We're not just making, just hiring cleaners or the lowest denominator in terms of jobs. We want to be there for a long time. So this is one of the things that we did. As I mentioned, during COVID, we donated 5 respirators, mainly in Argentina. We made a difference when it was most needed. Last year, the local hospital, we're doing a donation as well to make sure that things are keeping going. We have a strong focus on making sure this transition to the green metals, get batteries, get a better world. So this is a balance between the environment that we're trying to make a difference, and also people, and people is a big thing. So the lithium chloride concentrate we are going to get in the first half of the year, 2025. We want to get ongoing the best we can, the quickest we can. And I'd like to highlight that in our board, we got a guy that knows a lot about lithium. His name is Daniel Jimenez, ex-senior VP of commercial for SQM, worked there for 28 years. We got other SQM team members in our group, people that have been also in Oro Cobre, they know Argentina, they know brine, and these guys, our hydrogeologist, exploration manager, has done more than 1,000 wells. So we got people that are not only have explored, but also has been on the front line of developing and producing. And lastly, green bushes. Everyone talks about green bushes. We have submitted our permit. It's taken a bit longer than what we expected. We realized that the tape looked as red in Argentina as in Australia, but we're going to get there. We're going to go and drill it. And fingers crossed, we're going to be back at RIU telling you a bit more about how green bushes was, and fingers crossed. We are drilling green bushes because it has a good potential. We found a lithium anomaly. We found a pegmatized outcropping in the southern part. We're so close, so it's worth the punt. So with that said, we have a booth. Please come to see us. We got one of the best lithium project development coming online, light on CapEx, low OpEx, and we are in control of our own destiny. So thank you very much.
Thanks, JP. Back in 2008, our next speaker perhaps would have been better known to you as the MD of Integra, which was voted Australian Explorer of the Year in 2008. And if you go to 2011, Integra was actually voted Australian Miner of the Year, and it went on to have more successes. Chris Cairns was in charge then, and he's proven experience in taking an explorer to producer and beyond. Today, he joins us to talk Stavely Minerals, of which he is the executive chairman and also the MD. And Stavely Minerals believes it's identified a new copper province, doesn't it?
Indeed.
Over in Victoria.
That's right.
Let's listen and see what he has to say, see if there's any potential there for us. Please make him very welcome.
Thank you. Thanks again to Stuart and the team for the opportunity to speak to you, and thanks for the great introduction as well. Thank you. Stavely indeed feel that we have identified a new copper province in Western Victoria. It's probably about 40 million years older than the Lachlan Fold Belt, of course, famous for Cadia and North Parks, but identified by Geoscience Australia and Geological Survey of Victoria as having porphyry potential. We were able to be a first mover into that province and picked up a strategic land position of about 1,500 square kilometers in 2014. We listed the company and proceeded to explore and drill deep for a porphyry system that we thought was driving the Thursday's Gossan prospect. And I'll tell you where we're at now. Normal disclaimer, this presentation is lodged with the ASX and it's available on our website as well. So as mentioned, we were a first mover in this district. And so I ended up with that 1,500 square kilometer land holding. We continued drilling from 2014 to a discovery in late 2019 of the Cayley lode. June last year, we brought out the mineral resource estimate at just shy of 10 million tons at 1.25% copper and 1/4 gram gold, down to about 300 meters from surface. Total resources are quite a bit larger with a large chalcocite blanket near surface. and a small VMS deposit near Ararat as well. So contained total resources includes over 200,000 tonnes of copper, 100,000 ounces of gold, and in excess of 3 million ounces of silver. So that strategic land holding was really important. Our premise was that if we were successful in discovering a porphyry, that this would be of interest to a major, and a major likes to have room to move, and hence we picked up that strategic position. We did start looking for Acadia-style porphyry. We drilled 49 drill holes in the pursuit of that porphyry at depth. In the doing, we came across some structurally controlled high-grade mineralization at depths of about 550 to 850 meters. Our then consultant, Dr. Scott Halley, observed that this looked a lot like Butte, Montana, and that we should try to find the high-grade mineralization closer to surface. Hole 50 was the very next hole, and indeed hit 32 meters at almost 6% copper and a gram gold from 62 meters depth. It also hosted a spectacular 2 meters at 40% copper. That's that photograph of bornite coming across the core. And I will have that piece of core at the desk or at the booth tomorrow if you want to come and have a look at it. It looks quite spectacular. I took it to a monument maker, a headstone maker, and he's polished it up for us. It looks gorgeous. But the core does tell a story about the formation of this deposit. In the early drilling, we hit high sulfidation style mineralization, lower temperature, 250 degrees, whereas this stuff, the discovery hole, that bornite pyrite assemblage is looking about 320 degrees. Our latest drilling for the resource was hematite, chalcopyrite, magnetite, is looking at about 400 degrees. That's giving us a vector towards a porphyry down the plunge of the mineralization of this system, and that's what we're drilling now. So the resources, quite simply, very gentle, subtly plunged to the mineralization. The discovery hole, that hole 50 we just looked at, is this large magenta circle here. The high sulfidation mineralization is changing in character to intermediate sulfidation here in our latest and deepest drill holes. Worth noting that when we drill underneath the plunge of this, we end up with this base metal, precious metal style of mineralization that is cooler again. So 5 meters at 2.35% zinc, 0.4% lead, 0.25 copper, 1.7 grams gold, and 27 grams silver. So it's this classic carbonate base metal, precious metal, cooler style of mineralization. So the resources are well drilled. We had 120 drill holes, all diamond, because there's saline groundwater here and it's a cropping area. So it was quite laborious and took us 2 years to complete, but it's a very, very robust resource now with, in the order of 65% in the indicated category. It was based on an open pit optimization at $6 US a pound copper, but is 1.5 kilometers long, 700 meters wide and 300 meters deep. There's a small underground resource as well. We used a 1% copper cutoff for this, almost 2 million tons at 1.8% copper. The underground potential here, and I just illustrate it using this drill hole, quite spectacular, 87 meters at 1.75% copper, 0.5 gram gold, but very typical of the intercepts that we get in this deposit. There's the basal contact, in this case, just here, it's volcanosedimentary sequence here, ultramafic here. There is a bit of a chemistry contrast in terms of abundant magnetite in the ultramafic. So on the contact there, 9 meters at 4.1% copper, almost 2 grams gold, and an internal higher grade zone of 24 meters at 4.2% copper, 1.25 grams gold. Those higher grade zones you would target in underground mines. So this deposit is very amenable. The consistency of that basal contact is throughout the 800 meters of strike of this mineralization. So it looks very good from that perspective. So the way we see it being developed, there are two options really. A phase 1 open pit, it optimizes down to about 300 meters conveniently on that low angle structure where the mineralization is then offset here and continues in this position. Mineralization also on these two other structures through here, and I'll talk about some of the intercepts there. But really in Victoria, we're thinking that the most feasible option really is to go straight underground, small footprint, no big tailings dam, no big waste dumps, and much lower permitting risk. So that's what we're evaluating in studies right at the moment. But the porphyry target, we're actively drilling at this very moment. these intercepts that I've mentioned on these other structures, this is what we call the ultramafic contact fault through here. We've discovery hole up here, hole 50. Our last drill holes in the resource program drilled underneath that low angle structure, 173, 182, quite spectacular intercepts, 43 meters at 2.6% copper, 0.4 grams gold in 173. And 182 had 10.4 meters at 4.3% copper and 3 grams gold. Very interestingly, it also had about 5 meters at almost 7% copper and 6.5 grams gold. So notable is that the gold grade in that drill hole is now coming up to parity with the copper grade in percent. And that's really important in terms of how this system is evolving. Earlier pre-discovery drill holes, as I mentioned, hole 32 here, 6 meters, it's almost 7% copper. That intercept, again, we will have this as polished core at the booth tomorrow. It's got energite in it, so it's a high sulfidation character. It's about 250 degrees Celsius temperature of formation. And likewise down here, about 850 meters depth, hole 44, wedge 1, quite a spectacular intercept, 18 meters at 3.6% copper. But that has covalite, energite, digenite, etc. So again, cooler temperature, high sulfidation style of mineralization. So we go through an evolution in this system. This is just a picture of hole 73. Quite a nice hit at 3 meters at 10% copper and 3 grams gold is spectacular, but notably is that the textures of mineralization is changing. It's looking more like a stockwork, sort of jigsaw breccia style of mineralization. Chalcopyrite dominant over pyrite, you lose the massive pyrite. The system is starting to get too hot for pyrite. So that's a very important evolution in terms of our targeting for the porphyry. Likewise, the last hole drilled in the sequence, hole 182, this hematite, specularite, magnetite is very much an assemblage of around 400 degrees temperature. So we're getting very, very close and proximal to the porphyry. And this all was included in a paper done for us by Dr. Steve Garwin, presented to the board. It's available on our website on the technical data tab. And the 70 pages of the presentation is for your leisure to go through, but it's quite definitive in terms of the proximity of the porphyry to this. And really, this is the science. So this is a graph by Einaudi. I believe he's from Stanford University. The porphyry is up here. Your fluids are probably leaving the porphyry at about 600 degrees. As they travel away from the porphyry, they cool. So it's just temperature across the top. Our covalite energite stuff, the pre-discovery drill holes, we're looking about 250 degrees. We come back up the curve to bornite pyrite. We're looking about 325 degrees. That's the discovery hole. The last holes, 173, 182, the deepest hole we've drilled, chalcopyrite, hematite, we're about 400 degrees. And really, we want to be in here, this magnetite, bornite, that's the porphyry style, core of the porphyry type mineralization at about 500 degrees. So really, the story is quite simple in that context. The mineralization is changing in character from high sulfidation to intermediate sulfidation here. This is very cartoon-wise, but there's a porphyry under here somewhere that we're targeting with our current drilling, 4 holes being drilled to 800 meters depth. The first one was finished in here underneath 173, about 150 meters deeper down. Similar to these holes seen through here, where we drilled under the plunge, it's got carbonate base metal mineralization. So pretty much as expected. The next hole is out here, 150 meters, then 150 meters, then 150 meters. This one out here is in progress. It is my personal favorite. It sits underneath a very large copper in soil auger anomaly at surface. It's got a very clear magnetic feature that underlies it. And it's the intersection of a north-south and a northwest structure. So it sort of triple ticks those boxes. As I say, all of this is in Steve Garwin's presentation that's on our website. The similarity with the Lepanto and far southeast porphyry system is striking. We would argue that the Cayley lode is very similar to the Lepanto high sulfidation system, and that the genetic connection to the far southeast porphyry is really what we're looking at in our attempts to discover the porphyry under the Cayley lode. And worth noting, as I say in this disclaimer, that we're not making any claims in terms of tons or grade relative to this potential porphyry, simply that the opportunity for discovery has got precedent. So the regional exploration, we flew a large gravity gradiometer survey through our entire tenure. It's worth noting that the existing prospects in the area exist within a 20-kilometer window of exposure. To the south, to the east, to the north, it's all covered either by basalt cover of the newer volcanics or detritus coming off the Grampian ranges to the north. We have a number of targets through this area that we derived from that gravity gradiometer, and it led us to a blind discovery at Toro West here of a porphyry under 30 meters of cover and no exposure. That porphyry only has one phase of mineralization, so it's not going to make it. So it's a technical success, but it does demonstrate that our methodology of seeing through cover works and is capable of generating discovery. And we're second pass testing at least 6 targets in the current air core drilling program in progress at the moment. Likewise, near mine, we've got large soil anomalies. This is the soil anomaly under that target that I was just talking about, the drill holes in progress, with the Cayley lode proximal to that, very much the Lepanto far southeast sort of association. Big anomaly at junction 1, where there are previous intercepts of 35 meters at 3.4% copper from 24 meters depth. That's a land access issue that we're looking to resolve. Rare earths prospect over the Buckran diorite. It's an interesting prospect. We've drilled it with air core a couple of weeks ago. There are results pending. It looks like one of these ionic clay type rare earth anomalies, soil auger, result of 0.25% total rare earths. So quite a diverse suite of opportunities. Definitely copper is something that we're all going to need, and there just is no prospect of supplying what demand will be moving forward. So very, a very worthwhile or worthy asset, as well as there are very few of these sorts of deposits in first world jurisdictions. So we're unique in that respect. So just a corporate slide. Thank you very much for your attention, and keep an eye out on our drilling results. Thank you very much.
Thank you, Chris Cairns. There's going to be a bit of movement in the room. Do you have a bit of a stretch, everyone? Actually, while we're just waiting for our next presenter to come up, I've ID'd someone down the front here. Have a bit of a stretch and just move around while we do this. Trevor Connell, if you're in the room yesterday, Trev was the fellow whose phone went off. After I reminded you all to turn your phones off, Trev was going to pick up his wife. He was doing the right thing. He'd actually set a little timer to see how long it would take to get his wife and get the flowers to her. How did your flowers go, Trevor Connell?
I had a technical success with the flowers. When I got to the forest, there was none left. So I bought some chocolates instead, which actually worked out very well. Yes.
Right, that's okay. That was, you gave us that hint at the start of the day. You said, don't do it online, go in and get them. And actually, if you weren't in the room, Trevor gave us an awesome bit of advice as well, investing advice relevant to relationships. He said, the best thing you can invest in is your relationship. Doesn't matter how much money you've got. If you don't invest in your relationships, you're not going to be particularly happy. And I like that. All right, Andrew Tyrrell, come on up here, sir. This fellow has travelled all over the world as a geo. It's possibly easy to say where he hasn't been. He's been Brazil, Papua New Guinea, America, Egypt, my favourite, all over the place. When COVID hit, he was like one of the many geos in the world. He came home. And it's been a really lucky little thing for you, because you were snapped up immediately by a company called Gold Road Discovery. They wanted him as their general manager of Discovery. Now, Gold Road Discovery is a mid-tier Australian gold producer and explorer. They've got a 50% interest in Gruyere, which is a world-class long life and also low-cost gold mine. And they've got a really good portfolio of exploration around Australia, which is, I suppose, where you come in. And we would like to hear more about that today. Would you please make him welcome, everyone?
Thanks, Chrissy. Also, thanks to the sponsors and to Vertical Events today for having us here. It's great to be back for another year at RIU, and also great to see the enthusiasm out there at the exhibitors' booths. And also, I'd like to congratulate OZ Minerals for winning the Craig Oliver Award yesterday. It was also an honor for us to also be nominated for the second time around. 2022 has been a busy and exciting year for the company. Our Greer mine has increased its throughput to over 300,000 ounces per annum and is on track to be a 300,000 ounce producer. Our corporate transactions through the year have strengthened our positioning on one of Australia's most significant gold discoveries in recent years, and our exploration portfolio now extends into a number of highly prospective terrains across Australia as we look for opportunities to find our next standalone mine. The disclaimer, which you can find on our website. Gold Road continues to deliver and has a robust long-term sustainable future. Guidance for 2023 will see a targeted annual production of approximately 350,000 ounces per year at an all-in sustaining cost of $1,540 to $1,660 per ounce, and is supported by rising ore grades and increased plant throughput. We see the Greer joint venture as a 10-year plus operation underpinned by an attributable resource and reserve base of 6.8 million ounces. The company has a healthy investment portfolio valued at over 440 million and a balance sheet of 81 million in cash and debt. Our strong cash generation underpins our capacity to pay dividends and allows us to explore our expanded high-quality exploration land package. Gold Road remains focused on improving our sustainability credentials and ESG reporting with solid safety performance and strategies orientated towards progressively achieving net zero carbon emissions by 2050. Now moving on to Greer. The Greer story is not new. It is and still remains a fantastic tier 1 gold asset and has clearly created value for its shareholders. It's a low cost to operate, low strip ratios and consistent grade of over 9,200 ounces of gold per vertical meter supports this tier 1 status. The asset is long life, low cost, and generates a steady free cash flow stream and provides Gold Road a solid platform for further growth. 2023 will see the operation produce its 1 millionth ounce and is a significant milestone achievement, just 10 years from its initial discovery drill hole, a great effort by Gold Road and its joint venture partner. Our 2022 guidance for production and all-in sustaining costs were achieved. We saw approximately 315,000 ounces of gold produced at an AISC of $1,447 per ounce. During the year, output was hampered by unscheduled downtime and impacts to plant utilization, which unfortunately resulted in delays to processing some of the higher grade ore. However, we see the operation as being on track to meet its outlook of being a 10 million tonne throughput operation, producing 350,000 ounces of gold per annum by next year. Notably, we closed out our hedge book last November, and we are now fully exposed to the spot gold price, which is significant for the business considering the current inflationary environment. In front of you here is a great long section of the Greer ore body and shows the mining stages highlighting the better, higher grade parts of the ore body are still to come. The stage 1 pit with an average grade of 1 gram per tonne was depleted in early 2021. And we are currently mining stage 2, which runs at an average head grade of 1.14 grams. We see gold grades strengthening towards the base of stage 2 and an increasing average grade of more than 1.3 grams in the northern parts of the ore body, including the stage 3 and stage 4 mining areas, which become the main ore source over the coming years. The transition from stage 2 to stage 3 will translate to an uptick of approximately 15% to the grade of the ore feed. With increased throughput and higher grades, we are expecting some of the great years ahead for the operation. Looking at our resources and reserves at Greer, they have grown significantly since the project was developed, with our position as a long life operation bolstered in 2021 by the addition of an additional 1 million ounces of ore reserve. The main driver of this increase was additions to the Greer ore body, with more than 1 million ounces of indicated resource added since the feasibility study, combined with deep exploration holes and extensive geotech studies supporting steeper, fresh rock pit slopes, which allows for a deeper pit to be mined with moderate increases in strip ratio. Our exploration activities within the Greer JV in 22 focused on the Golden Highway trend between Attila and Alaric, just immediately west of the Greer ore body, where we expect to grow the resource and reserve base over the next 2 to 3 year period ahead of commencement of open pit mining operations in this area. Gold Road's attributable resources and reserves stands at 6.8 million ounces and includes a modest resource of 500,000 ounces within our 100% Yamana tenure. Here we see a long section of that Golden Highway trend. Exploration last year, the team completed a sizable 19,000 metre program of RC and diamond, aimed at further delineating the near surface resource potential of this 16-kilometre mineralised trend. It's important to note that no drilling had been completed on the Golden Highway for the past 10 years, so we tasked the team with scoping out the full value proposition of this project area. On the image, you can see the significant intersections returned from last year's drilling, with those highlighted in yellow received last quarter. Some of the better intercepts include 7 metres at 4.9, 10 metres at 8.6, as well as 5 metres at 16.8 grams. Results to date have confirmed continuation of mineralisation between the existing defined deposits, as well as at depth. We even see the well-mineralised trend extending into our own 100% tenure to the north. Drilling is anticipated to continue into 2023, with a focus on further infilling of the mineralised envelopes and in resource conversion. To round out Gruyere and the joint venture, production guidance for 23 is between 340 and 370,000 ounces of gold. This is underpinned by a lift in the grade to 1.3 grams, as well as increased throughput due to a focus on plant availability, operational efficiencies, and installation of a third pebble crusher later this year. We see gold production in future years growing to a sustainable 350,000 ounces with throughput rates of 10 million tonnes, well above the nameplate design of 7.5 million tonnes. Our attributable and all-in sustaining guidance is between $1,540 and $1,660 per ounce, and our modelling takes into account the current inflationary environment, the cost to install the third pebble crusher, and a scheduled tailings dam lift. We don't anticipate further capital growth spend in 2023. Gold Road remains a low-cost producer in the lowest quartile of the Australian gold sector. So just quickly moving across to some of our corporate investments. In June of last year, Gold Road successfully completed its corporate transaction and acquisition of DGO Gold. With that transaction, the company acquired a stake in one of the biggest gold discoveries of recent years and an extensive portfolio of early-stage gold and copper exploration projects throughout Western Australia and in South Australia, including some prospective tenure in the Pilbara's Mallina Basin. The company's 19% holding of De Grey strengthens our existing business positioning on high-quality ore bodies in the low-risk jurisdiction of Western Australia. With the DGO transaction, Gold Road also acquired a holding in Yandal Resources, who have an early and advanced staged exploration projects within the Yandal Belt, near to existing infrastructure and active operations. And since these transactions were completed, we have already seen an increase in their value to over $440 million, and is a substantial boost in shareholder value. If we look to our exploration portfolio, I'm quite excited with the opportunity that our expanded portfolio brings. The integration of the DGO exploration projects, our recent applications in Northeast Queensland, and of course the Yamana project offers exciting optionality for discovery success across multiple prospective terrains. Our discovery strategy is unchanged as the team remains determined on discovering Mine 2 that will transform the business. Our budget remains fixed at $30 million with a focus on disciplined allocation of exploration dollars to only the highest quality projects through technically informed and financially sound exploration targeting decisions. Investment allocation is underpinned by Gold Road's system of stage gating and peer review. While we continue to prioritise the drill testing of Yamana's key targets, our teams are in the process of preparing to get into the field at both Mallina in the Pilbara and at Greenvale in Queensland. Discoveries are made in the field, whether at the outcrop or at the end of the drill bit, and so we drive the mantra of quality targeting, followed by quick and effective on-ground testing. If we look across to Yamana, for a long time, this has been the jewel in our crown, and our efforts over the years have made some notable economic discoveries, as well as a number of technical successes, which unfortunately, though, have not translated to that next big discovery. Our systematic exploration efforts continue to delineate and to test areas of high potential with a focus on the southern project area, which we believe still demonstrates the main characteristics of major gold camps. We currently have one air core rig in the field, working through our early stage regional targets, and we anticipate an RC and a diamond rig in the coming months. We should start to see a steady stream of assays from this work, as well as drilling completed at the end of 2022 and over the coming weeks. Our approach to exploration and insights on the Yamana Belt has made leaps and bounds over the last few years. We have acquired the necessary fundamental data sets to bolster our understanding of the regional structural framework and are really beginning to tease apart where we think the gold mineralization is being localized and what the key controls on the placement of known deposits are. This application of framework studies forms the core to our exploration team's work and is the foundation to a disciplined and effective exploration process. I am excited to see this feed back into our team's targeting and prioritization of work over the coming months, with my expectation being that this process moves us in the right direction to making meaningful discovery at Yamana. Gold Road's Melina project was acquired as part of the DGO transaction. As you can see, our tenements adjoin De Grey's Melina Gold project and is a long strike from the world-class Hemi discovery. The team have been synthesizing existing data sets and we have come up with a compelling regional structural interpretation. We see comparisons in the structural and geological position of this tenure to other known gold deposits within the district and are excited to get back onto the property to follow up on the targets we have identified to date. We are currently working through land access and anticipate to be drilling in early Q2 of this year. In South Australia, our Stuart Shelf project, which was also acquired through DGO, is being targeted for two styles of mineralization, iron oxide copper gold deposits and sedimentary hosted copper cobalt systems. As you all note, our land package is situated within the Olympic copper gold province and is elephant country. If you want to find world-class gold systems, this is the type of address to be in. It is a region of active consolidation, obviously notably BHP's tilted OZ Minerals, and has seen a lot of active exploration with notable discoveries of Oak Dam by BHP and Emmy Bluff by Coda. While we recognize the blue sky potential of this region, our priorities lie elsewhere, and we are actively seeking a strategic partner to move this project forward. In Northeast Queensland, we were an early mover into a region in which our generative team identified areas for potential of intrusive related gold systems. While the team were able to hone in to target areas containing intrusive centres illustrated in the yellow circles at Greenvale, these are associated with major first order structures and in the right age of intrusive rocks. The project areas also contain historical drilling from the 80s and 90s from past explorers such as Normandy, some of which returned significant intercepts. And the region has seen little systematic exploration since. Encouragingly and potentially validating our conceptual targeting shortly following our tenement applications, we soon saw aggressive tenement pegging by some of the majors. We expect to obtain tenement grants shortly and are working through land access ahead of on-ground mapping, geophysics, and follow-up drilling programs later this year. To sum up, we remain focused on creating shareholder value. The business remains well-positioned with a strong balance sheet, a growing production profile, a pipeline of high-quality exploration projects that we expect to advance this year, and a strong technical team that continues to focus on excellence and performance. And if you'd like to come to talk about our projects, come see us at our booth out there in the auditorium. Thank you.
Andrew, thank you very much. And my apologies. My first words that came out of my mouth should have been acknowledging your nomination for the Craig Oliver Award for 2023. Would you please put your hands together again for Gold Road? Very impressive to make it to that. And also thank you for acknowledging the award winner for 2023, OZ Minerals. If you weren't here at the start of the conference yesterday, OZ Minerals was recognised from a very impressive group of small to mid-cap Aussie miners as the best industry all-rounder, all excelling in all areas from exploration through to environmental and community. And we had Principal Geologist Jim McKinnon-Matthews accepting the award on behalf of OZ Minerals, who are coincidentally our next presenter. Jim, can I ask you to come up the front, please, sir? There you go. Now, it'd be interesting to see, Jim's actually been in the business for 30 years, almost 3 decades, haven't you, as a GO? The last 5 years, he's been part of the OZ Mineral team. So let's see if winning that award in 2023 is going to translate to winning some ground for our investment portfolios. Would you please make him welcome, everyone?
Yeah, thanks very much. And good afternoon. I hope you're all doing well and ingested enough caffeine to last the next 15 minutes. It's only 15 minutes away and we're already running a bit behind time, so I'll try and be brief. Winning the Craig Oliver Award was totally unexpected, and acknowledge all the other candidates for that. I'd like to start by acknowledging the traditional owners of the lands which we meet, and I pay my respects to the elders past, present and emerging. Now, the aim of this presentation is to give you just a quick snapshot on who we are, where our projects are, and just to present a few recent highlights. I'm not going to go in any detail, but we've got a booth that I'm more than welcome to take anyone through if they want to continue. Standard disclaimer, not one page, but two. I guess 2022, like for many in this room, was a very busy year, and we're all still recovering from the challenges COVID brought around through the lockdowns and border closures and the challenges that they produced. The highlights for Oz were signing of a mining agreement with the Nunyatara on the West Musgrave project, and having this agreement in place allowed for the construction activities to progress on the project late in 2022. Significant activities across our three operations, Carrapateena and Prominent Hill in South Australia, and also in our Carrapateena East projects, basically allowed us for increased production in the years ahead. So there's a lot of infrastructure and being put in this area, which is continuing. We entered into agreement with Havilah Resources on the 245 million tonne copper gold Kalkaroo deposit and surrounding tenure in eastern South Australia, and I'll touch on that today. And of course, the BHP takeover, which is one of the talking points that we've been hit up with at the conference, which wasn't totally unexpected. The Oz shareholders, just want to point out that the Oz shareholders will vote on the scheme most likely in April. And until the shareholders voted in, it's still not quite a done deal. Being able to do everything that we do is enabled by an innovative culture of people who take pride in what they do, and that was greatly recognised and greatly appreciated earlier on this conference with the Craig Oliver Award. And we do consider all stakeholders when making decisions. So underpinning our organisation is the aims to create value for all stakeholders: workforce, community, shareholder, government, customer and supplier. And this is underpinned by basically our Oz way, and this is basically the ecosystem in which we operate. So if anyone wants to have a look at that, that would be great. We're at the booth, we've got the poster up. We are a global mining company in Australia. We have operating assets at Carrapateena with a 23-year mine life, with a 210 million tonne reserve. Prominent Hill in South Australia again, 16 years of reserve at 62 million tonnes. And they're both located just north of Adelaide in South Australia. We've got the West Musgrave project in construction phase, 270 million tonnes of reserve, and currently sitting at a 24-year mine life. I mentioned the Kalkaroo deposit. It's currently sitting at a 15-year mine life, but we've got an option to acquire that over the next 18 months. In Brazil, we're active in the Carrapateena East and West and producing from the Pedra Branca mine in that region. And we also got the Centro Gold project in the Gurupi province, which is still undergoing the approvals process in northern Brazil. And that's 28 million tonnes at just under 2 grams. And we got significant exploration activity with multiple projects across Australia, Peru, Brazil, Sweden. And last year we completed over 30,000 metres of drilling. And I've got to point out that 30,000 metres was largely, I'd say at least 80% of that was on greenfields targets. And a lot of those were single hole tests. So there's a lot of drilling been going on and a lot of organisation goes with that. I'll do a few quick slides on Prominent Hill and Carra. 16 years mine life. We're currently sinking a shaft to access the resource at depth. And that will the hope there is, and the expectation is that will add mine life. A lot of this information is in our recent quarterly that was put out in the last couple of weeks. So if you'd like more information, there's more information here. Carrapateena is a big block cave, large resource. The total resource is over 1 billion tonnes. The reserve is 260 odd million tonnes at the moment. And that'll take us through to 2045. And once the block caves come into into production, we'll be looking at a throughput of around 12 million tonnes a year. Highlight at Carrapateena on the 29th of December this year was the breakthrough of the cave to surface, and this allowed the mine planning to be optimised rather than focusing on the cave development. What I mean by that is that with the cave breaking through, it's now reduced air blast risk to people working underground. The block cave is, the development is currently at 1 kilometre, and that they're looking to access that in the next, start producing from that in the next 2 to 3 years. West Musgrave feasibility study, you can see by the picture here that, yep, we've actually started the, with production schedule commence in 2025. And of significant note is that this mine is planned to be run by renewables, wind and solar, to generate 80% of the power for the first years of operation. And that's got a pathway to a net zero scope emissions by 2038. And this means to be one of the largest, lowest emissions, lowest cost nickel copper mines in the world. Again, with West Musgrave, we've got a huge exploration portfolio here. So there's a lot of exploration upside to add significant value. Also, the mine plan does not include the Sukkot resource, and we're expecting to put up an update on this in later 2023. We're also looking at a metal hydroxide precipitate for the battery value chain. So there's a lot of value adds that we can put onto this project that isn't actually currently considered. It's worth noting where West Musgrave project first started, and I think looking around the room, there's many people at this conference who's actually worked on the project and since its discovery 23 years ago. It was first discovered in 2000 by WMC Geos, following up a concept, and Tim Krask is in the room and John Ronsky is well known. So they were spearheading a lot of this project generation work. It was actually found following up the concept, regional lag geochemistry, subsequent EM, and then drilling. And I guess what I want to point out is the left-hand photo is the extent of the Gossan at Babel. It's about 1 metre by 1 metre. So significantly, Babel makes up probably 70 to 80% of the actual resource of the 270 million tonne reserve here. And that's all that was sticking out of the ground. And the right-hand slide shows younger versions of Andrew Boyd and Rob Waugh with massive sulphides after drilling of the EM anomaly at Nebo. And Rob has not improved his taste in shirts. Kalkaroo, we've got an option agreement with Havilah, and that goes for the next 18 months. We can withdraw at any time, or we can press the button and say yes, and that will go through. There's a mineral resource estimate of 245 million tonnes at 0.45% copper and 0.41 grams per tonne gold. And that's in South Australia, that's in our backyard. So putting our foot on that to have a good look at it was a clear decision. And the potential for scalable, low-cost, long-life assets in South Australia makes a lot of sense for the company. We've got a huge exploration tenure here as well, and currently we're exploring. We've got one RC rig working 7 days a week, and it's been going for the last 3 months and will continue to do so for the foreseeable future. So it's gaining that optionality. And on the optionality, I guess this next slide shows the projects that make up our existing growth pipeline. And our projects are continually working through the program. We filter these through on a regular basis. And it just allows optionality what goes through to development phase and ultimately through to the operations. So we've got a very full pipeline, but partnering is critical for us in the early stages, particularly in exploration. We've got a very small team, particularly in Australia. We've got 7 geologists and 2 geophysicists, and we're running 13 projects. The vast majority of those are joint ventures where we get our joint venture partners to manage and run the programs. Again, got this slide up at the booth. Our exploration approach, I won't dwell on this, but focused on high-value copper and nickel projects. sustaining a high quality pipeline, the use of innovative technologies, which increases probability of discovery. We do use machine learning and AI, and Rob Rutherford brought up another one called GI, which is the grey index, the grey intelligence, leveraging and enhancing our reputation as partner of choice, and also application of good integrated planning, and that leads to efficiencies across the board in our exploration. Now, South Australian exploration. I know I'm going fast. I want to have a coffee. South Australian exploration. Now, for those of you who forgot where South Australia is, it's about 7 hours east of Norseman, and if you get to Broken Hill, you've gone too far. We've got a number of drilling programs cranking at the moment. We're drilling at Havilah. We're drilling on the. We're drilling over here in Havilah. We're drilling on the Stuart Shelf. Drilling for us for very large ICG targets around Carra. We've got an RC program starting at Mount Woods in the next month or so, and we've got a data science target down at Pandara, which we'll be drilling in the next few weeks. So we've got a full bottle of work ahead of us. Just want to touch on the Peak and Denison project, and Duncan Chessel from Copper Search yesterday introduced the Peak and Denison as part of it's a bit of a rafted off version of the Mount Isa inlier. And the targets here are basically hundreds of millions of tonne copper gold IOCG Poncari style deposits. We've got a JV with now AIC. AIC took out Dean Metallica. And last year we drilled 2 separate IOCG systems with the 2 holes in intersected basement in this region. And just to give you a bit of a taste of what we hit in one of the holes. Now, yes, these are selected samples showing copper mineralisation, but I can tell you the alteration went for hole 264 metres of the drill hole. So significant system. And lastly, the last slide I've got from an exploration viewpoint is the ARI project. We've I'd like to also give Rob Rutherford a plug. We've got currently got 3 projects with Rob at Red Metal, 2 in Queensland and 1 in Western Australia. And we've got a drilling program going to be planned for later on this year. We flew an EM survey recently on the last 12 months. And what we've identified is we're 50 kilometres along strike from Winu, along the same gravity ridge. We've got a very large resistivity feature on trend, which is about sort of 8 kilometres in strike. And within that resistivity feature, we've got a number of discrete magnetic anomalies. And we're looking very forward to drilling those. And they'll follow some heritage surveys that we've got planned in the next month or so. So in summary, and I think I'm going to be on time, which is great. We've got a great portfolio of projects from early stage exploration through to operating mines. We've got a suite of long life, low cost mines in stable jurisdiction. We're focused on modern minerals, mainly nickel and copper, and they'll continue to be in demand. We're always trying new and innovative ways of doing things. And listen, we're more than happy to, there's 3 of us here. We're more than happy to talk at the booth if anyone's got any further questions. And as I said earlier, yeah, it's not over till it's over. And it'll be up to shareholders in April as to whether we get another letter on our shirts. Right, thank you very much.
Thank you, Jim. You rounded us out very nicely there for that session. So, well done. Thank you, sir. Right, you've already made your move. We've got 22 minutes exactly to fight with one another. No, we won't.
Hi, my name is Brad Gurry and I'm the CEO of Social Suite. Social Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference. And I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Galan Lithium, Galileo Mining, Helix Resources, International Graphite, and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG